Good morning, traders. This is Christian from Hertz, CEO of Tribeca Trade Group, with your weekend look ahead video and a reassessment of the markets a little bit. So, what a week last week's. A little bit, I would say, something for everybody. We had a lot of noise events last week. We had a late day sell off on Friday that hit some sectors, not every sector, but some sectors. So, want to just go over the major indices first, and then we'll talk about what I think happened in technology late on Friday. We'll talk about what other sectors saw some new money being put to work, and then we'll do some chart studies. So first things first, S&P chart. There's not really much to talk about here. It didn't do much all week. From basically where we started last week, we didn't move. We tried to take a next leg higher a couple days last week, but it just didn't really work out, and it was essentially flat for the whole week. We never really closed heavily below the value area. So again, a real good proxy for the week, which we will be setting up for next week and looking at the coming value area, which looks like we're going to start right in the middle. But you could see how slim a value area that we have for next week. Why is it so slim? Because it's based upon last week's price action, which traded in a tight range. However, it is a little bit deceiving when you talk about, oh, well, we really didn't move that much for a week, because there was a lot of things that were going on in individual sectors and individual names where there was a lot of opportunities to make money. There was a lot of areas that broke out, and there was a few areas that not necessarily broke down but cooled off last week. So the reason why I kind of look at this and we'll make a point about it is I really don't think that, in my trading, I really want to be just an index trader, because there's a lot of more interesting things that are going on within sectors in those individual names. It just, to me, doesn't say, hey, this is captivating and there's momentum in the S&P. I think we definitely had if you looked at, and again, if you look at the sectors on a daily basis every day last week, you had about 3 or 4 sectors that were up big, and you had a couple sectors that were down, that were also down big too. So it just, when you look at what's inside the 500 names and how they're moving together, there's a lot of crosswinds. All right, so we'll go to that's S&P. Nasdaq, looking on the hour V bar, obviously this happened late on Friday, about Friday afternoon. There was some selling, and this was very reminiscent, I would say, of well, I'm not going to go there yet, but certainly there was a lot of selling pressure that happened. The Qs, XLK, SMH, semis, they all traded multiple times, normal volume for the day. You could see this big spike up in volume. So the main thing here is, and a lot of these charts look the same. So I'm going to switch over to Bloomberg, and I'm going to talk about, which one do we want to talk about first? Let's do Qs. Basically, there is nothing. We got very overbought for about a week or two in the Qs. SMH, I'm going to show you that as well on the RSI, but there's no major support that's really been taken out here. When the price gets way above the 50-day moving average, you want to start taking profits in option positions. If you're if you're a trend trader, trend traders basically just stay the course until support has been broken. But if you're an options trader and you've got short-term options positions, you want to be cognizant of overbought levels, which is really what happened. Going back here, I'll go back to this chart. You could see for the RSI, it stays overbought. It just basically shows how powerful this rally has been in the Qs, because normally the indices don't stay this long overbought, but they did this back in May, and we got a big move down on one particular day, which was bought back right away. And then today, or I should say Friday, was a much bigger drawdown and much heavier volume as well. So there was decent selling going on. So the last time we got a bearish MACD crossover, and it really didn't last for long. So we'll look at some levels to watch. So I don't think there's really anything major to take away from Friday's price action, other than it was, a pretty decent sell-off on high volume. I think you want to be patient here, but people have been looking for a dip. They're like, oh, if only I had a dip in technology, or if only I had a dip in some of these names. Well, here you go. Here's your dip. So if you've got a long-term stance, maybe you don't necessarily need to jump 2 feet in buying Monday morning, but maybe wait to see. What I always typically look for is a couple things when we've had a big sell-off in a particular area. Is a can we retake some levels? Let's see if we start lower on Monday and then kind of reclaim some levels. So I would maybe watch Friday's close and see if that would probably be where I would that would be the level that I would be watching to see if we can climb above. If we start the day lower on Monday, if we can climb above Friday's close, and then that's your support going forward. Also, you could look at this value area 139.11. You could also trade against that. That's some nice support for the whole month of June. So that's what I'll be looking at. The other thing to kind of note, which we're going to talk a little bit later, I'm kind of jumping ahead here a bit, but same thing in the semis. Look how overbought the semis were on the RSI, and it's always for me, every indicator that I have on my charts, I use. I don't just have them, and I think it's a good point to kind of say, hey, what studies do you have on your charts? How are you using them? Are you just putting them on there for show, or are you actually going to use these things? And if you don't use them, you should just take them off. But RSI is something that I look pretty heavily at because it gives me a sense of whether or not we've got too extreme of a movement. And you could see that we got close to an 80 RSI. That's too much for a sector ETF. It really is. Again, it's basically a barometer telling you every time we get to an overbought level, it's a great place to take some profits. We saw this again, same thing with May. We got two ahead of ourselves above all these moving averages, the 5, the 20, and the 50, which is the purple. So same situation. Now notice in the Qs, we got back down to, well, we sorry, I was going to say XLK got close to the 50-day moving average. SMH is not even there yet, so it just shows you how strong this area is. So again, maybe I'm looking at 85.69. That would be my area to kind of get back involved. But again, we burned off all these overbought levels, and this is what happens when we get super overbought. It's a warning sign. So that's basically what we have in the semis, and we can go through these one by one. But I think against that level, kind of just trading against that level is where you want to be. Always, as with anything, is have your support level defined about where your trade is not going to work. So I would look for next week a break above basically right where we are, 85.70, and then kind of go from there. Next, so that's just spent a lot of time on technology, but that's where the action was. It did see a lot of outflows last week. I'll go into those raw numbers. It also takes a couple days for it to flash through. But what was particularly interesting, so we talked about SPY, we talked about Qs. Let's talk about IWM. So IWM. 52-week high on Friday. So this just tells me that there's kind of a rotation. It's not. It certainly didn't feel like a sell everything. Some of the small caps and some of the other sectors did succumb to the pressure that we saw in Qs a little bit on Friday, but they bounced back pretty well. So 52-week high. We did not close on the highs on Friday, but still, really nice move in IWM, and I think a good sign for the overall market. Transports, just looking at them, pretty much flat for last week, but still looking pretty interesting to me. Pockets of different areas, particularly the airlines, which came off a little bit on Friday, and also the rails, I think, are interesting. What really where I'm focused on and will be focused on next week is for some of these areas that have been moving sideways. I've talked about for the last couple months how I've been neutral, banks and financials. I'm not neutral anymore because you always have to kind of change. You can't, you can have certain views and talk about why you don't like something or why you do like something, but if it changes, you want to be able to get on board quickly. You don't want to be anchored to those beliefs and say, oh, well, I didn't like the financials 2 weeks ago. I still don't like them. No, I'm changing my view here. Why am I changing my view? Because when I said I was neutral about financials, I said I don't like them because the price action is below the 50-day moving average, also below the 100-day moving average. That's not the case anymore. So you've got a breakout and or a break above. I shouldn't say breakout, but you've got it's the same chart. And you could see the inflows. These are evidence of buying. This is money going into financials inflows. Bloomberg is nice enough to now have this on the chart section. Remember what we saw back in November. These were all the money that was going into financials as a catch up trade. So is it the same? Is it the same level? No, not necessarily, but you could see that there's definitely some buying going on, and I love the buying now that the price is above these two moving averages because you have your support. If it's not going to work or if it's a false breakout, you've got your support of. I would say the 100-day moving average is closer to price, which I would use, and I think really interesting. So I'm going to go through some charts in a minute. I just wanted to give you my game plan going forward. Same thing before I get to that. Let's see. No, I'll stick with my game plan because I want to talk materials too, but that's also in the chart section. So my plan going forward is really to stay the course. As I just went through a couple charts, there's nothing wrong with seeing some sector rotations, going into some support where no support has been taken out. So this is a great. I don't want to say buy the dip moment because there are levels to watch because Friday was just one day. We don't know if there's going to be a lot more selling on Monday or Tuesday, but I've got some levels to watch. And like I said, I would watch Friday's close and see if we start to move above that. So that'll tell me that the selling has dissipated, and then also as always, I'll watch for aggressive call activity. Let's see if the buyers start to go into there. We did see a little bit of picking in some of the names late on Friday, but still we're seeing other areas catch call buying. We're seeing a lot of the financials. We're seeing some material names also catch. We saw some bottom feeders as well in energy, which really doesn't suit my trading plan, but all those energy names are in downtrend, so I tend to stay away from that, or I might trade small counter trend trades. So, that's my stance going forward. Where would I change my stance? Not because of any politics, which I know you go on Twitter in a given day, and people have all you see is not all, but you see a lot of opinions, opinions, opinions. Same thing with CNBC. I don't want to look at any of that stuff. I want to say the price will tell me when something is going to change. So if the price action starts to break below any of the moving averages, that tells me that I need to change my bullish or my long stance. Again, I'm not a perma bull. I'm just respecting the trend, and all the trends are up. Even with that nasty sell off late on Friday, there was no breaking of any major trend support that I saw. All right. So sectors, so we talked about this. I'm not trying to give myself a pat on the back, but we talked about this in last week's newsletter. That's why we do this homework and to try to pick up on some signals. So, what did we see last week? And I said this in the newsletter. I sent it in last week's several places in last week's newsletter. Is that we had really a big increase in market breadth, which is generally a good thing. However, many sectors got way overheated, and we use a momentum indicator at Tribeca Trade Group. That's our Raptor indicator, and it tells me when things, there's a rating scale from 0 to or from -12 to +12, and you can see how many sectors, and also it'll also tell you rising, which means momentum is rising. Once we get to a lot of sectors that have a +12 rising, that's as far as they can go. So they can't get any more extreme than that, and once things get extreme, it tells me to take some money off. So we did that exceptionally well in the Tribeca trading room last week. Had another nice week of profits last week. Was I completely unscathed on Friday? No, I trimmed the majority of my tech semi holdings, but I was still holding on to one or two things, which I'm still holding on to a bit. So, I didn't completely just liquidate my whole portfolio, but certainly I trimmed. I was a bit overweight, probably tech and semiconductors, and now I am underweight. All of those groups, and we'll see what happens. So, a great job, a great teamwork last week to figure this out and take some money off the table and not get hit on Friday. So what are they telling us now? So there's a whole flip-flop in sectors. The only thing that really stayed the same was energy, which is still in a void in my opinion. It's below the 50, 100, and 200-day moving average. Almost every other sector kind of flip-flop. If you look, you got materials, which were kind of in the middle last week, are now the top sector in terms of ratings, and you got financials. You got a couple other sectors like healthcare that's up here as well, but really a big change in how those sectors. Again, everything is still all above the 50-day moving average, but just a changing of guards in terms of what we saw on Friday. Again, a lot of these sectors, like materials and financials, ended up positive on the day on Friday. So I was reading Twitter this morning, and you hear a couple of people talk about the market crash on Friday. Like what? What are you talking about? Because there was a lot of groups that were up on Friday. A lot of people who say that kind of thing, they're probably caught. They probably got caught with some longs. They've also have never probably seen a market crash or don't know what it is. But I just thought that was kind of funny and how dramatic people can get. Um, and I don't mean to criticize anybody, but just take that step back and realize, take a look at the charts and look at, what the trend is, which is up. All right, so that's what I see now. So again, still very strong. I would say all of the sectors, but a changing of the guards a little bit. In terms of sectors performance last week, which we covered all this, but it just makes sense to kind of look at what groups. XME was also another group that was up 4% last week. International was pretty quiet last week. A lot of the areas that have been outperforming kind of took a breather. Greece, you could see, was down about 2.9%, and a lot of European areas kind of took a breather. They were down last week. You could see VGK was down 1.7%. Look at the best performer of the week. I'm going to talk about the chart of ASHR. That is, I'll get into the details a bit, but that is Shanghai. That is not Hong Kong shares. Okay, so fund flows. This just kind of confirmed everything that we talked about. A lot of money going into financials, which is different. They went from last week, they were the biggest U.S. sector in terms of outflows. This week, they're the biggest sector in terms of inflows. So a 360 there. Consumer staples. Take a look at this mainly happened before the macro type events last week, before the Comey testimony, before ECB. Look at the money that went into in the beginning. Maybe a little bit too much money. You could see this breakout. So you could see as there was a little bit of more of a risk-on rally towards the end of the week, consumer staples kind of sold off, and they were essentially flat on Friday. Just I would keep an eye on this name. I think there's something with this much money being allocated into consumer staples. Somebody obviously thinks that either that's probably that they have more room to run than this little breakout here. So that was the second highest. Again, $1 billion last week. Again, that was all Monday, Tuesday, and Wednesday of last week. Energy also saw some inflows. Healthcare also saw some inflows, and technology and actually industrials saw the biggest outflows. Where did they take that money out of industrials? Right at the highs. So take a look at that big red bar. That's the outflow, and that was basically right here. So a lot of money being taken out basically on the highs here on this. Kind of looks like a little bit of a mini reversal candle. But still, I think the trend is fine in industrials, and I think individual names is something that I'm looking at within this group. So that's the sector flows. In terms of international, Europe is still, even though Europe underperformed a little bit last week, that's still where the money is being allocated. $1.7 billion went into Europe. Also, emerging markets, 1.7, also, or 1.8 if you round up, going into emerging markets. So nothing really changes here, just a lot of money still being put to work in international areas. Keep in mind for last week, uh, U.S. equities did see much more inflows, $13 billion. Most of it was the large S&P funds, like for example, SPY saw $5.2 billion. IVV, which is the same exact index, just different fund manager, $2.8 billion. And then we already talked about XLF and XLP, but that those numbers, the $13 billion, a lot of it was straight the big indexes that saw the inflows. All right, so we already talked in detail about XLK. I threw a couple other charts in here. So again, I really don't think anything to kind of worry about here. Maybe it comes in a little bit further here in SMH. We'll see in the beginning of the week. I think if you're patient, the other thing is, which I may not have mentioned, but we've seen dips before in this going into support, and they've gotten bought every single time. So could it change this time? Sure, but until that happens, I would be looking to add longs, provided that we do find that support and stop going down. This was a little bit different. So this was a trade that I was in last week. I think I started this trade in KWEB. This was on this day. Sorry, I'll give you the exact days. This is the Chinese Internet ETF, which I'm no longer in. I sold out of. So I bought this starting on 5:30, and then I added a bigger position the last day of May, 5:31. Took some nice profits. I took a good chunk of this trade off on this gap up. I didn't like this price action whatsoever. This was the gap up of Alibaba, and Alibaba is 10% of the KWEB ETF. So a pretty good a pretty good chunk of that ETF. But I don't like when something starts gaps up and then finishes either lower or close to it. It did find support, so I took about 2/3 or actually 3/4 of that trade off on this big gap up, which is great. I mean, this is where I put the trade on. This was massive profits into this trade, so very very pleased. But I of course you're always hoping for a home run trade, and I said, you know what, you got to respect the price action, and I don't like how we gapped up and came in, and then further, I ended up taking off this trade. I said, let me sit with the last portion of the position, and but be very cognizant. And then once I saw tech started to sell off, I got out of the whole thing, probably right in here. So that was a huge winner. Does it kind of is it a little bit disappointing to take the trade off this early, because I thought this would definitely continue much higher? Yeah, but I could get, if it holds the 20 period, I could always get back into this. And what I would be looking for at this point is maybe a break back above 49.55. So I've got no more positions on in this group. I've got one small position left in Alibaba, which I was in for a huge winner last week as well. As I mentioned, I had a good week last week. So, it's fine. I could reassess. So I'm reassessing right now, 49.55, and that's where I'll get back involved into the China internet names. All right. So next. So that's the only one that really looks a little bit different to me in tech. Uh, you know, a couple different names here you could actually throw in. I'm looking at XLB and I'm looking at MOO, which is the agriculture ETF. XLB breaking out to 52-week highs. So I'll continue to watch for individual names in this space where we see aggressive call buying. Here's a couple names that I thought looked technically attractive. Also, the MOO ETF. This is agriculture, so this is names like Monsanto, Potash, Mosaic. Also breaking out to a 52-week high on Friday. Didn't exactly close on the highs, but still looking pretty good in here. XLF, which we already talked in detail about the inflows last week. Looking at some individual banking names, which we've seen a lot of call activity in Citi. Citi right now looks like the best chart in terms of financials. I've got it labeled as a breakout. Much different picture, and we talked about this about a week ago as well, where I was saying, hey, Citigroup looks like it wants to push higher here and looks much different than some of the other money center banks. But at this point, take a look at Bank of America. I think call activity was running 6 times higher than average on Friday. So there's buyers in here. What do I want to look at? Number 7, option breakdown, and you could see that the call volume on Friday was 634,000, and it says 9 times more than normal. The ADV, that doesn't seem right, or percentage, I guess that is, but the ADV. Oops, I guess if I keep going right, I could see more, but it looks like the ADV is about 212,000 in BAC, and it traded 634,000 call options on Friday. So that tells me there's buyers involved here, and there was a lot of sharp, aggressive sweep type buying. So close above the 50 and the 100-day moving average. I'm willing to give this a try. I actually did put on a couple positions in the financials on Friday to take advantage of this. So this is pretty easy. Why is it easy? Because I've got defined support. That green line, the 100-day moving average. If this is a false move in the financials, I will get right back out of these with a break. Probably, I'll give myself a little bit of room. It'll probably be the 50-day moving average. Same thing in JP Morgan, which we saw some call buying as well. This one broke the 50 right at the 100-day moving average. So nice call buying in this one last week. And then Goldman, I like the defined support. We've actually been talking about this in the trading room quite a bit. You've got your support at the 200-day moving average, which held pretty nicely. So it's got to get over this area. It's got to climb above the 100, but I think it's worthy of a shot, again, with that defined support of the rising 200-day moving average. Wells Fargo. I really haven't played Wells Fargo much at all until Friday. Why? Because there was a nice September 60 call buyer that went up here. This was 4,000 of the SEP 60s that traded. So if I bring up the biggest trades of the day, there should be one in here. It's not coming up for whatever reason, but you could see that there was 4,000 over 4,000 of the SEP 60 calls that I do believe were purchased. So 60s up here. And they're giving themselves all the way out to September. But I also, just like Goldman, you've got your defined support of the 200-day moving average. And I think along here makes sense. Where it doesn't work is if it starts to break back below the 200-day. But I also like the rising 200-day moving average in this one. A couple other names that I was looking at. First of all, I'm not going to go into detail because the video would just be too long for today. But you could look at the asset managers. This is names that made a 52-week high, or excuse me, not a 52-week high, a 50-day new high. You could see a bunch of them that are doing that made a recent high. I picked out a couple names that I have my eye on. Let me go back to the newsletter. Sorry about that. KKR. So this is another private equity name. Been in an uptrend for a while now. Watch a break above 19. What's nice is you could put alerts now, so you could, which you have been able to do for a long time. But it's one of my favorite features. So I've got my eye on KKR, but I don't have to sit and literally watch the chart. I know where I care about it. Right around 1905. That gets us out of this sideways pattern. So 1905. Also MetLife looks interesting to me, above the 50 and 100-day moving average. So there's a bunch of other banks. We talk about them in the Tribeca Trade Room. Those charts will be in Slack for all of our members to look at. I wanted to talk about one international ETF this week. As I mentioned, with the ETF fund flows, there was a lot more money that was allocated to the U.S. versus international. So that's why I spent a lot more time on the U.S. this week. But ASHR, which is different than FXI. This is, again, the Shanghai, not Hong Kong listed shares. This is the multi-year chart. If you remember, Shanghai went through this big move up when there was when the country allowed new investment or foreign investors to get into the local A share market. So this was this big move up, and then we saw this big move down. Again, this is looking at multi-year, so notice this base that it's making for the last 2 years. Full disclosure, I've tried a couple times to go long ASHR, but it just hasn't been ready to go yet. And it seems like every time it's got to this 26 level in the ASHR ETF, it's failed. So I've had my eye on this. Last week, I went long on this move up here. As soon as it broke 26. And somebody asked me on Twitter, because I put out the trade on Twitter last week. They're like, "Well, what's your target price?" I'm like, "I don't have one. I want to let this thing see how far it goes." So classic, trend trader is find a breakout and get involved and see how long it goes up for. If you look at this chart, the high was a 55. I'm not saying that that's going to happen, but I'm willing to kind of let that go. Right now, my stop price is going to be, I didn't even use them. Usually I use the moving averages, but they're too far down. So right around 25.30, I think, is where I put my stop price, which is back below this dotted line. So that's the only thing I really need to do. I put that position on, and we'll see where it goes. It has, like I mentioned, it's tried to get going a couple times before and stalled. Let's see what it wants to do this time. So that's it for today's video. A little bit longer than normal, but really a lot of areas to look at, and it's exciting. It's exciting to see some other areas get involved. Not to say that that rally in tech is over, because we haven't broken anything, but it is exciting to see some other areas break out. And again, I really think it's not an overall sell-off. Friday was a rotation. It was a little bit of a violent rotation, but certainly by looking at some of those areas that were up on the day, you can see that there's money going into certain things and certainly money coming out of other things. So that's it for today's video. Check us out, TribecaTradeGroup.com. If you're looking to try an introductory offer, you can email me. My email is cfromhertz@yahoo.com, or excuse me, cfromhertz@gmail.com, and I could get you guys involved with checking out the trading room for a week trial. So thanks very much for watching the video, and have a great weekend.